Hey, welcome back, traders. It's June 7th, Friday. Here's our general market update. Presentation, as you know, is made for educational purposes and is my views of the market. Okay, our agenda is we'll get into the indices and market breadth, see what's going on. Then we're going to talk about some sectors, and then a segment called balanced and objective, and then we'll try to summarize. Okay, so let's get into the indices and what's going on under the hood. This is a chart I used last week, June 4th, and I had shared my concerns that we've had a few bad up days on this rally attempt and things really didn't look too good underneath the surface, especially when we're so near new highs. So what do things look like as they develop this week? So here's a view of the NASDAQ composite. And this is really a chart that we're going to walk through that kind of says it all to me. So this is the NASDAQ composite, and we've obviously moved to new highs. We had a small pullback, and now we've moved to new highs again. But the first thing I wanted to show is the new highs in the market. Over here, going back to February, we had 357 new highs as we made a new high. As you can see here, we made a new high reversed, but we had 361. Then we pushed to another new high in middle of March, and we had 360 new highs. Then we had known that the market was starting to see some distribution in this period. And then we came down and we tried to rally. And when we tried to rally, we really had a pretty pitiful number of only 68 new highs. Then we came down into more of a pullback, and then we rallied. As we rallied, we had a couple of good days in here, and it looked like game was on. And then we made a new high right here. But we only had 177 new highs, much lower than we had previously. Then we had another new high with 89, and then the next new high was at 141. Then we came back down, and we've had 141 new highs on this little touch of the 20. And now we've moved to new highs again. This is as of yesterday's chart. We only had 135 new highs. I haven't looked at today's, but the point still stands. There's a lot of hype about NVIDIA. It's dominating the headlines. We're reaching all-time highs. But this is not a good picture. This is abnormal to have the market trying to move to new highs, and the new highs are really weak. You can see down below that the picture is weak. We don't even have 50 or so new highs, but very sporadic. So it's not good. Now, looking at the breadth again, I've got two more lines on the chart. Here's the QQQE, which is the equal weight. And all I wanted to show you was, as the market was making new highs in the composite, we had a new high in the equal weight. And since then, we've had this rally attempt with the NASDAQ making new highs, and we don't have any all-time highs on the equal weight. And the equal weight has not even been able to recover the swing high right here. We're still well below it, though the NASDAQ has pushed higher. Same thing looking at the QQQJ, which is the next 100 stocks in the NASDAQ after the Qs. And you can see it's the same story in terms of breadth on the NASDAQ. You can see we haven't even exceeded the swing high yet. And it's even worse than the equal weight. So this is just not a good picture. It doesn't look normal to me at all. And it's very, very concerning as the market tries to move higher. Now, I also pulled this off of Wednesday's Investors Business Daily Market Outlook. And frankly, I was shocked to see that their exposure levels were at 80 to 100% with some of the things going on under the surface. Now, this is part of the distribution day component of evaluating the market. We haven't got an excessive number of distribution days yet, but that's only one piece of the puzzle. You got to put all the pieces together to get the most accurate, or at least the weight of the evidence read of the market. So I thought this was surprising. I think the market is vulnerable here. I'm not suggesting a crash, but it could just mean an area of chop where we go sideways for months throughout the summer and maybe all the way to the election. So here's the S&P 500. I think the story is the same here. When you look at this, I broke down some of the bad up days that we had last week. Nothing really changing here other than, again, this is just a goof on Jim. Every time Jim Ropel does a podcast, he was bulled up here, we had a reversal. He did a podcast here, we had a reversal, and he spoke again. I think it was Wednesday. Again, all bulled up, and we're in this kind of precarious market. So just goofing around with Jim. He does a great job on the podcast with Ali Corum. So a brief look at sectors. This is another reason why I'm concerned is many of the sectors are not doing well. Now, it's normal to have a correction in a sector or a group, but it's the next rally that really tells you how strong or weak the market is. And when we couldn't get to new highs, you can see the XLI, we rolled over. That's not good. And you can see it's happened with the XLB, couldn't rally to new highs, rolled over. XLE is completely made lower lows. The housing index, HB, rallied, stalled out, rolling over. 2 weeks ago, we saw the software index get completely slaughtered on the CRM earnings announcement. It's a chart of lower lows and lower highs. Cybersecurity, lower lows, lower highs. These are just not good charts. That has me concerned that a lot of sectors are not doing well. Now, that being said, we still have some leading sectors. The semiconductors are still the leading sector, led by NVIDIA, and communication sector is also doing well. So it's not all lost, but the preponderance of the evidence is many sectors are rolling over. Now, I wanted to get to this segment called balanced and objective. You know, when we look at the market, we try to be balanced in what we see, and we want to be flexible. I think, you know, you're really looking at it right now, you know, you're trying to determine, is the market under accumulation or is it under distribution? And, you know, I think it's really difficult to say that the market really is under accumulation. Some of the leading stocks have been like birds shot out of the sky, and some other ones are struggling as well, and we're going to look at a few. But we don't have an excessive number of distribution days either. I just think the internals are just not very strong. We're not getting participation. We're not showing some of the equal weights showing strength in the market. So again, we try to be balanced. We try to be objective, even with positions that you may be holding, which can be very challenging at times. So here's the king. Here's NVIDIA. And obviously, it's all the rage as it's approached the 3 trillion valuation on, was it Wednesday, I believe it was. Now, this stock has been the performer, incredible performance. Many people have big, big gains in this stock, and that is tremendous. I'm glad people were able to nail it. Now, the stock may have further to run. It's currently the market leader, and it's still performing. Now, it's important, though, to be very objective, particularly if you have a position and you have big gains. You always want to look at a position and say, what's the risk and reward in the trade today, not what it was a month ago or 6 months ago. And, you know, astute investors will be looking for, I want to watch for the sell signals that may come in a stock like NVIDIA. You really want to avoid just getting so excited and so emotional that you're already extrapolating your gain, saying, well, if this can double again, I'm going to be here. That's very, very dangerous because you really get trapped into a mindset. So try to be objective what you see on the charts. The chart might have further to go. I will say that 3 trillion is a staggering amount of market cap that it's made. The 10-for-1 split is it's a very large split. Historically, that can pause a stock or even top a stock. Now, the upper channel line in the video is very close to being hit. The market breadth is not great. So all I'm saying here is, look, NVIDIA has been an absolutely great leading stock. You don't want to be blind and bullish, though. So what I've looked at here is this is the percent extension above the 10-week moving average for NVIDIA. So when you see these large extensions, this is meaning that the stock is very extended above the 10-week moving average. And I've just put these vertical lines to show you when the stock has gotten to these levels. You can see level here, stock paused. You can see here, stock had a little bit more to go, and then it actually based. And right now we're hitting another one of those extensions. We're very close. We're not quite there yet, but right around this 3 trillion valuation. So try to stay open-minded and don't get locked into one particular view. Now, here's another big leading stock. This is Vertiv Holdings, one of the big leaders, and it's an AI play with its cooling systems, et cetera. So I just want to put this in perspective. Again, trying to stay balanced, trying to stay very objective. The stock had its big breakout in June of 2023. So it's been running for a year. Now, to put it in perspective, model book stocks typically will run for 18 to 24 months. So the clock is always running, and you want to be aware of that. The stock has been a true leader and performer. Now, there are some signs that we're starting to see some early distribution in this big leader. So the things that I look for, and I'll point them out, is I always look for the amount of selling on a pullback or a correction. And you can see here, back in February, the stock came down and the selling did not push the stock. It didn't even reach the 50-day. Then you can see the next pullback to the 50-day actually touches the 50-day moving average. And the third one that we're experiencing right now is undercutting the 50-day moving average. So it's showing you that there's starting to be some more selling in the stock. So that's something subtle, but to look for. The second thing is, and it's probably not the best chart to show this, but if you look at the past 2 months in this stock, these ranges, these price ranges have become much more loose and wide. So that's a concern that shows you that maybe there's some distribution going on the way up in this stock. And another thing you'll notice is this last push to new highs, the volume was really, really below average, not nearly as powerful as we had over here. And then after that kind of weak volume on the rise to new highs, we certainly have been hit with 3 or 4 days of distribution in a cluster. So there are signs that the stock is coming under distribution. And always remember, it takes months for an institution to buy a stock and to accumulate it. And it takes months for institutions eventually to distribute a stock. So I'm not calling a top in the stock at all. I'm just sharing with you my views on looking at it objectively and balanced. It certainly is starting to experience some distribution, and you need to watch it closely. Some other leadership, as I mentioned, this is not good for technology when you have Dell gapping down on earnings. Nutanix got smoked on earnings, and both of these actually met their expectations, but they did not meet the forecasted guidance. So they got really whacked. That's not good action. Supermicro has basically diverged from NVIDIA. It's no longer hitting new highs. It's actually been declining since March. So that has really diverged. And even CrowdStrike, which is my holding that I told you about last week, which I've held since November, we got a fantastic earnings report, and they raised guidance. But staying objective, that great news still was not enough to push CrowdStrike out of this basing structure. So I don't know what it's going to take. If you say you had beat and raise, a lot of good news, and you still couldn't get out of there, that's just not great action. Now, maybe next week this thing blasts off. Well, we don't know. For those of you interested, the way I handled it, I really didn't like these 3 or 4 days down. I have low cost, but the way I handled it is I cut the position size in half to protect myself from a gap down. And what I did is I bought calls. So I now have January and March 350 calls. So I still have upside if this thing wants to run. And I still have half my position at an average cost under 200. So that's how I played CrowdStrike. We'll see what happens as the market progresses. So as a summary, the indexes are making new highs, which looks good, but I think underneath the market looks very, very vulnerable. Now, you can say, hey, John, we're still above the NASDAQ's above the 20-day, and so isn't the S&P. That is true. The indexes don't look bad at all. It's what's underneath that is concerning. The net new highs, net new lows, very weak with the market making new highs. This is a major caution sign to me. And again, the leading stocks, we talked about it. NVIDIA looks great. It may have a lot more to go, but try to stay objective. A lot of other leaders are getting hit and struggling to make progress. I believe lowering the exposure, a big chunk again from 40, I know it's 40 to 50 last week. I think you should be down to 20 to 30, which is very different than where IBD was. Not that I care what IBD recommends. Um, and the reason is I think this 20 to 30%, I think at this time you need to be holding names that you have a very good cushion in and you can withstand a pullback. Because I think we might go sideways and chop for a while. Now, that's just an opinion. And of course, my opinion doesn't really mean much. We want to watch the market's action. I don't think it's a time, given the risks and vulnerabilities I see, to open new positions right now. I think we want to be patient. I think we want to see this under the surface to get stronger before adding exposure, but that's just how I'm approaching it. Here is the quote of the week by Ed Seykota, commodities trader. Markets are fundamentally volatile. There's no way around it. Your problem is not in the math. There is no math to get you out of having to experience uncertainty. Markets are very uncertain. All we can do is try to be flexible, try to read the market for what is actually happening, and then take our actions from that. Very good quote from Ed Seykota. Rain King Insights, I'm working really hard on this. I'm trying to get this all together. I'm still trying to say we're going to get this thing launched on July 1st. If any of you are interested in Rain King Insights at all, just send me an email to support@rainkinginsights.com. I'll get you on a list. We will have an early bird special. You can check things out and see if it's for you or not. Hey, thanks everybody. That was the general market update for Friday, June 7th. Have a great weekend, and we'll all get back at the market next week. Thanks.